The end of cheap oil, a catalyst for higher gold and silver prices. Welcome, ladies and gentlemen, to today's video where we explore the fascinating relationship between the end of cheap oil and its potential impact on the prices of precious metals, particularly gold and silver. Let's dive in. For decades, our world has relied heavily on abundant and cheap oil, powering our economies, industries, and transportation systems. However, as we approach the end of the cheap oil era, uncertainties arise, creating ripple effects across various markets. As oil reserves deplete, extracting the remaining oil becomes more expensive and challenging. This supply constraint leads to higher oil prices, which could trigger economic challenges and inflation. During times of economic uncertainty and inflationary pressures, investors seek safe haven assets to protect their wealth. Historically, gold and silver have been considered as stores of value, making them attractive investment choices during such periods. When oil prices surge, production costs for goods and services increase, resulting in higher consumer prices. This phenomenon, known as inflation, erodes the purchasing power of fiat currencies. In response, investors turn to precious metals like gold and silver, which historically have shown a negative correlation with inflation. As the competition for dwindling oil resources intensifies, geopolitical tensions may arise between nations. Uncertainty in global politics can further fuel demand for safe haven assets, driving up the prices of gold and silver. Central banks play a crucial role in the gold and silver markets. When facing economic turmoil, central banks often resort to loose monetary policies, including quantitative easing, which increases money supply and can potentially devalue fiat currencies. This, in turn, strengthens the appeal of precious metals as a hedge against currency devaluation. Technological advancements and innovations will shape the future of energy production. As renewable energy becomes more viable and widespread, it may reduce oil's prominence, leading to more substantial price fluctuations and an even greater demand for precious metals. In conclusion, the end of cheap oil could have profound implications on the global economy and financial markets. As investors seek to protect their wealth from inflationary pressures and economic uncertainties, the demand for safe haven assets like gold and silver is likely to rise, driving their prices higher. As we embrace an era of change, understanding the interplay between oil, precious metals, and the global economy will be essential for investors and individuals alike. Thank you for joining us in this exploration of the potential impact of the end of cheap oil on gold and silver prices. Remember to stay informed and make well-informed decisions for your financial future. If you found this video informative, don't forget to like and subscribe to our channel for more insightful content. Until next time, stay curious and keep learning.